Hello, KWRC. Dylan Silbernagel and Matthew Gizzie here to talk to you about what's going on in the real estate market. We want to hear at the end of this what you guys are seeing in your local markets as well. And so, what we do constantly is Matt and I love talking about what's going on in the market. We love talking stats. We do go to painstaking efforts to break down the different markets that our clients are interested in. And so, we wanted to take today to share some of that with you. And again, keep that dialogue going because I think what we're seeing, Matt, is two camps forming. We've got the buyer camp and the seller camp, and they couldn't be more separate in terms of what's going on in the market and how they're perceiving things. And we'll get into that as we go. And so I want to jump right into it here, and taking a look at what we've been seeing in average price recently. And I know every area is different, but this is across the Toronto Real Estate Board. So talk to me a little bit about what we're seeing here. And I mean average price specifically when I look at that blue line, in the last couple of months, obviously more of a dip than what we were seeing in the HPI benchmark.
Yeah, if we go back to January 2022, where we saw the average sold price and the HPI, they topped out there. 2023, we saw a smaller top out at 1.2 million. And now we're seeing in 2024, we didn't get up there again. We're starting to roll over. And how far will it potentially come down closer to the end of the year when it typically gets slow? So I'll definitely be keeping an eye on just how slow we get, or will we see a market in September, October that's going to pick up? It's hard to say that it will, but I don't know. What are you seeing on your side?
Yeah, I think, you bring up the seasonality, right, of summertime. We're going to see a fall market that turns it back around. And I think, some of us were thinking that would happen last year, and we got quite the opposite. The fall market came, and the market just really hit a brick wall, right? Sales dropped tremendously, average price dropped. You saw some people that had bought first slash their prices, and we saw it throw off a bunch of markets, right? So it'll be interesting to see. I don't think I think there's too many outside factors to really rely on the seasonality of the market like we used to. So I'm expecting buyers to come back like normal in the sense of like, hey, I'm off my vacation now. I'm going to start evaluating what's going on. But as we see in some of our next charts with just the sheer amount of listing inventory, I think there's too much stuff that needs to move before that's really going to make a difference. And when I look at this one, it's interesting to see that the benchmark price has had more of that gradual decline when we're looking at average price across the Toronto Real Estate Board. And you got to remember, the start of the year was pretty great. There was multiple offers. There was low inventory in a lot of areas. And then it was really around, I'd say, like April that I think that we saw that change. And I know Newmarket in specific in the detached housing segment, I think they topped down at 1.42. They're now sitting at 1.2 something in terms of average price. I know we've got the median price coming up in our charts. But again, big decline there. And really the averages are skewed, but look at how that drop off has now come to bear in the last couple of months. And I think that the other thing that we need to consider here is when we're looking at transactions overall. Like you said, looking at what 2021 brought for us, and then 2022, as we saw those rates continue to increase and sales volume just drop, and our peaks have come down as well, like even for our hotter months, right?
Yep.
So.
And the thing to look at, prior to the last two lows is they've kind of bottomed out close together. So will we see another bottom out for the fall, early January market, or could we potentially come down even lower?
Yeah, I think that's a good question. I think that obviously, if you see here, the bottoming out is right around December, right? Right around December for those years. So our year end could be quite low. I'm optimistic here that the second half of 2024, with our fall market in particular, surpassing some of this. I'm optimistic for that. I don't know what it'll look like yet, but if I was going to bet, I would say that 2024 should be in a better spot sales wise than we saw in 2023. So we'll just have to keep watching and see what that looks like. And then here's where we're getting into it in terms of listing inventory. And I've got 3 condo listings up right now. And I can tell you that they can be a little sluggish in terms of showings. And there is a lot of competition out there once you get outside of your own building. And Matt, it was you that first brought this chart to my attention, looking at just the sheer volume of inventory. So talk to me about this when you first found it and sent it over.
Yeah, I'd heard some of the rumors online that there was just a massive amount of condos getting dumped onto the market, and I think a lot of it is just a lot of pre-construction was coming due. It can take 3, 4, 5 years for this stuff to hit the market, and what's happening now is you've got a lot of people that bought, whether for themselves or as investments, and they just the rates for the mortgages are just so much different than what they had anticipated.
Mm-hmm.
So you've got this influx of properties hitting the market in the condo space, and people just can't afford the payments on the mortgage for those.
It's interesting too, because in the pre-con world, there's condos as well that aren't appraising at what they were originally bought at when they bought in the peaks, and now they're kind of coming to bear here. And I was talking to a real estate lawyer the other day, and he's like, it's bad when they're priced in with 20% margin of error, because you have to have that 20% down on these pre-con purchases, and you're still having challenges with appraisal come through.
Yeah.
So it's interesting to watch. And again, looking at that, it's officially the highest it's ever been, right? You go all the way back, and we're at a peak for the condo market, and we did increase by an extra 100 units even just last month. Oh, wrong direction there. Looking at our detached, I think we're in a better spot when it comes to the detached market overall. As you can see, we've definitely climbed up in the last years. There's no doubt about that. But we aren't at the highs even of 2017, 18, 19, and coming into the end of 2019. So I think, and I'm pretty sure, like most people can agree, that is reflective in the market there in terms of the amount of inventory. Like there's a lot more than I think most agents are used to, but it's not to the levels of you're like, oh my god, every other house has a for sale sign, for example.
Yeah. And I'm wondering too, how many of the detached individuals refinance their mortgages in 2021, maybe 2022, and they're maybe not feeling too much of a pinch right now because they're still potentially needing to refinance next year in 2026.
Mm-hmm.
But we're seeing the incline of units hitting the market right now. So definitely not to the extent of the condos and what we're going to see on the townhouses. And I think that's more because you've got investors and first-time home buyers who don't probably have a lot of equity. Maybe the first-time home buyers and the investors, it just doesn't make sense to hold the property anymore. Whereas detached, you can, if you're living in it as a family, you can make it
Yeah.
work at the end of
Canadians
the
have
day.
all historically found a way to make it work, much so than our counterparts in the US, right? When it comes to foreclosures, power sales, stuff like
But
that.
we're seeing the levels increase, so there are cracks forming potentially
Yeah.
if this number continues to head up, and if we are hitting a wall of refinancing in 2025, it will be interesting to see if this number continues to head up.
Yeah. And so obviously now switching over to the towns, like you said, again, highs, just like we saw for the condo market, and it's been continuing to increase. It's funny, if you look back at the detached for a second, we did taper off just a little bit last month. And I think that's, in the summer months, you'd be anticipating that a little bit more. We'd see more come off the market, fewer people listing in the summer and waiting until that fall. But in our condo and townhome market, it's just continuing to rise there, right? I think you
Yeah,
made a fantastic point about it being first timers and investors, more so in those segments, and specifically the investors taking more of a sideline approach now and not looking at those as much as they have been in past decades, even, right? Or the past decade.
yeah. I mean, I don't know about your business, but I'm not having a lot of investors knocking on my door
Mm.
asking to buy properties, and I'm not having a lot of first-time home buyers knocking on my door. I'm, the calls that I'm taking are from individuals either downsizing or have large portions of equity from another home. They might be moving upwards, sideways, down. But we're not seeing the first-time home buyers and investors, and I really believe that's why townhomes and condos are seeing the level of
Yeah.
inventory that we're seeing right now because the buyers just don't exist at these levels of interest rates.
I think it's important to note as well the casual investor that was using their HELOC previously has stepped to the side. And some of them are even the ones that are in trouble a little bit because they overused that HELOC in a place that they shouldn't have. and not everything's carrying these days as well, right? So
Correct.
I think that's a great point. And so, looking at listing inventory is one thing. Well, let's take a look at average price as we talk about what's going on there. And I mean, this holds true to our experience in the market so far this year. As we saw that kind of increase throughout the spring market as things were doing a little bit better. And then I think it was really as we started approaching the first rate cut announcement there in June, when everybody was anticipating it. It's funny is when things started to slow down. And this is where we're seeing the drop is really coming now after June in terms of average price for the detached home. And again, this is now looking at York. We're not looking at all of the Toronto board anymore, just specifically looking at York region. We're seeing that sharp decline there in average price. And, when we get to our last slide there about what Wawa found in regards to declining rate environments after peak highs, this is kind of following the trend, like right in line with when the announcement was made. So it'd be interesting to continue watching that as we go through. All right. I don't know if there's anything else necessarily we need to add on our York detached other than the graph is speaking for itself in regards to average price.
I think it's held up well. Like if you look, the peak from 2023 and 2024 have held up. Yeah, you're going to see a dip in price just because of seasonality.
Yep.
But it held up well. At least the price at the peak wasn't lower than 2023's. So even if it dips back down like it did the previous 2 years at the end of the year, we should see a strong market in the spring for detached if this chart holds true.
Yeah, that's a great point. Looking at the condos, a little bit more of a fluctuation in terms of what's going on there, but similar trend line. We had our uptick coming through the spring months and now our tapering off. And I love that you mentioned the seasonality of it again. It'll be interesting to see what comes in the fall in terms of pricing. Does it rebound a little bit? Do we have more stability there? We didn't match so far. We haven't matched our June or our 2023 high as of yet. And excuse me, when you look at those inventory levels, I think there's no doubt or no confusion as to why we're not hitting that. There's just so much choice out there in the condo market for a buyer that's looking.
You know what? What a fantastic chart to use with your client and say, listen, these peaks, if you want to get into bidding wars and buy in the spring market or the spring market, the prices go. If you want to get a deal and you're a buyer that's looking for a deal, it's coming. Yeah. It's coming just like it did the last 2 years. We can see the bottom there, which is around 580, something around there. So if you're looking for a deal on a condo, it's coming in the next couple of months. The market will, just like it has the previous 2 years. You'll find a lot of sellers that need to get out when there's not enough buyers in the market.
Yeah. And again, that one looking maybe more so just around 670, I think, for the bottom there. And then just kind of about the same for our 2024 numbers.
Okay.
I know as you and I are recording, we've got a much smaller screen. I've got another monitor up that gives me the better look. But that's exactly the point. And looking really at that, December, January time is funny enough when they were at their lows. So it'll be interesting to see if we continue that pattern going forward. And it's typically the way that it is. As we look at York townhomes, same thing, kind of that run up in the springtime. With the townhome market, we saw the peak a little bit earlier than we did in some of the other areas. So that decline has been happening a little bit more consistently there through the townhome market and in York region. So, this is one that I've been watching closely for a couple of investors that we have that are looking to get rid of their townhomes. They've had enough time in the market with them, and we're just monitoring and waiting for when the time might be right. But over the last few months, this is what we've continued to see. So it hasn't inspired any movement there, at least on our end. But I would say anybody that's looking to make that move up from the condo to the townhome, it's great to see the townhome pricing coming down. You just want to hope that your condo is in a desirable enough building that you're outpacing what the averages are there.
Yeah, I think that's going to be the hard part just because of the amount of inventory on the market for both of them. Now, if you're in a detached home and you want to downsize to a condo or a townhouse, what a fantastic time to do it.
That's actually a great point because we usually talk about in a down market, the best thing you can do is take advantage of a move up, right? Because historically, your detached homes will be hit at a harder percentage than your townhomes or your condos will because of affordability factors there. But when it's because of interest rates and economic factors that we have coming into play, those lower brackets are being hit harder. And the detached home segment is still doing quite well. So that's a great point in terms of like, if you are in a detached, there are certain pockets right now where you will do quite well to sell the detached home and pick up the condo if you're looking to downsize, specifically because the detached market is holding its value better now than the lower price ones, which is not usually how it goes. So it is a great opportunity to take note of. All right, let's pull into York Region here now across all home types. For the month of July, our median price saw a little bit of a softening there to just over 1.2. Our sold listings down a little bit, new listings down a little bit, and of course, average days on markets increasing just a little bit. Our months of inventory, 20% up. It's a little bit higher now, and very balanced leading into buyer's market at that 4.7 months worth of inventory. And yeah, Matt, I think this holds pretty true to what I'm seeing in terms of York in general as well. And I mean, when you look at the charts there on the condos and towns, it's pretty reflective that we know that it's the detached market that's helping keep these numbers afloat.
Yeah, I think a lot of the minuses on this screen are mostly due to condos and townhomes. We are seeing a little bit of a softening in the detached price as well, just because of the season.
Mm-hmm.
But you're right, they are holding up a lot stronger. But the active listings, you know, it's still increasing, even in the summer months when
Yeah.
typically maybe we see a bit of a softening in new listings. We're not.
Yeah.
We're seeing still strength in listings coming. So even going back to the argument where come September and October, we're going to get a lot more buyers back into the market because of holidays. But are we going to have a lot more sellers potentially come that were on holidays as well that are deciding that maybe they want uh, to participate in that market? But we've got a lot of inventory that we haven't gotten rid of over the summer too.
Yeah. And I think that was the challenge last year is there was a bunch of inventory that didn't clear out over the summer months, and then everybody came back in the fall at the same time, and you just saw that glut of inventory hit. And there's a chance that we see more of that this fall as well, with sellers saying like, okay, I think another a rate cut's going to come in September. Maybe that's going to be the time that I put it on the market. So
Yep.
a factor of seasonality as well as people watching rate cuts potentially. And so as we come into this, we've broken down all these active listings in terms of various price points, and you can see we're still pretty good in York in general. From the million to 1.5 is still pretty tight. It's still technically a seller's market at under the three month mark there. And again, this is where I think where we talk about the benefits of taking advantage of a move up purchase, because you see those areas above you holding more inventory and having that more competition between sellers, but choice for buyers, specifically at anything over the $2 million mark, right? In terms of the amount of inventory.
Yeah, that's a lot of properties sitting on the market right now in the $2+ million range. I would even say the 750 to $1 million range, and below. They've got more inventory there, but I think it's because they're probably holding offers on those properties.
Mm-hmm.
So realistically, they would probably be around the 3% range when they actually do sell at whatever price level. But I think we're going to see it across most of the regions today, is that there's a lot of very expensive properties sitting on the market, and the amount of buyers is falling. So anywhere from 1.25 up, we're seeing less sales year over year for those categories, and we're starting to see more and more inventory building in those areas.
Yeah, 100%. You're looking at, from 2023 to 2024, 269 down to 204 units, slight decline in the 125 to the 1.5, slight decline there in the $2 million mark. Yeah, we're still seeing that it's slower sales volume wise than we were last year coming into summer months. I'm waiting for the rollover to happen where we start to see more sales in 2024 than we saw in 2023. And at this point, it's looking like that's not going to happen until the fall.
And
If we're lucky, right? We definitely want to see
we're
that happen. If we don't see that happen, we're in a maybe 65,000 ends by the end of the year if we don't see this thing turn around.
Yeah, At the end of the day, we need a catalyst to change people's minds, and that probably will come in the form of maybe larger rate cuts.
Mm-hmm.
But in a regular market, yeah, when people are happy to spend money going into a September, you're going to see an increase in sales. And I don't know if we have the catalyst for the fall market just yet
Yeah,
to
I
drive
agree.
people to buy it.
Yeah, that was well said. All right, coming down to our hometown here in Aurora, again, just that mild softening in terms of the median price. I think a little bit more maybe not that much more shocking. It is the summer months after all, but continue to see that decline there in sold listings, while new listings remaining relatively the same. Months of inventory going up that little bit again makes sense for the seasonality of it. Like this is, you hear the term soft landing being thrown out a couple times, from our government, and I don't know if that I don't know if that holds true. I think it's a little premature yet. But this element, in terms of where we're sitting for summer months, it does feel nice and soft. Like we're not seeing anything drastic coming off the cliff. Yeah, what's your take when you're looking at Aurora here?
Well, the thing with Aurora is people love Aurora. People want to
Yeah,
live in Aurora. It's a fantastic place to raise a family, to
yeah.
live. And I would say that these numbers are a little soft on the side because typically they hold up very, very well. But like you said, it is the summer months. Sales down 17%. Months of inventory starting to build. A little surprised that prices went down 5%.
Mhm.
But maybe it's just the July market for that. I'm sure a lot of people that can afford Aurora are probably on vacation and up at a
Mhm.
cottage or out of the country. So maybe that's having a factor there.
Yeah, and it's funny, on Wawa's website they had a list of, I think, top 10 most expensive markets, and Aurora came in at number 10. I didn't include that chart today, but maybe for our next video we'll have that in there because it is interesting to see and point out. And when you see our active listings, across the board here in Aurora, they're all over the place a little bit. There's not, like, Aurora's not a huge place, right? So we're not dealing with huge volume in any of these one areas. I think obviously when you look at Aurora being one of those places where we did add the $3 million plus price bracket, because we do have those homes. Clearly, there's 35 of them currently available, which is why that months of inventory looks so high, because we only have those three sales. But it's interesting to see that those three sales for the month of July is, two more than what we had in 2023. But otherwise, still seeing that decline, specifically in the million to 1.5 range. We're seeing that decline year over year in terms of sales volume, holding steady at the 1.5 to 2, and a big increase. This is interesting to see, 2 million to 2.5, a big increase in terms of sales volume year over year, which I think does, like you're talking about, speaking to the money in Aurora, people wanting to be there, and just generally how it holds up. When I see the breakdown in prices, it's very interesting to see those increases year over year in terms of sales volume at the higher price points.
Yeah, I think a few things that stand out for me here is below $1 million. Last year we had one sale there, and that's because prices just you couldn't find
You
anything
couldn't
that
find it.
low.
Yeah.
So now you're starting to see you can actually find places below $1 million in the freehold section. Little bit of softening from the million to the 1.5 million, and
Yep.
I wonder if that's just because maybe some people aren't realistic on the price and where the market's kind of moved. So maybe those transactions that would have happened are being stalled a little bit because past 2 million, that's a very strong market. And I don't know if we're going to see another one like Aurora in our charts today as being this strong past the $2 million mark. Yeah,
Yeah.
there's inventory piling up, but we're seeing uh, a better year over year in sales than
Sales.
yeah.
100%. And this is like, we looked at those average price of townhomes in York region in particular coming down. And again, that's where you're seeing this. Like if you think about the Bayview Wellington neighborhood, you couldn't get a townhome for $1 million previously, and now you can, right? And that's why we're seeing 8 in our freehold market here have actually sold at that price point. And yeah, it's interesting to see. I think that the other note, as you see the softening here, is yeah, for sure there was last year, specifically in the mil to 1.5, these two categories. If you're somebody that paid 1.6 for a house last year and now it's 1.45 or maybe even a little bit less depending on what it was. Yeah, I think that's why you're seeing some of those listings stack up and people holding off more, trying to hold to their price and not seeing the sales keep up with it.
Yeah.
So, yeah, taking a look at our other city there in our other town there in Newmarket, not quite as low of a dip there that we saw in Aurora. We're now looking at only a 3% decline in median sale price for the month of July. Our sales volume again down just that little bit, not quite as much. Like I'd say that Newmarket again, looking at the overall across all home types, holding pretty steady in terms of some of the other stuff that we've seen, right? Even a decline there in active listings.
Yeah, we had a decline in active listings. We had a decline in sold listings, and with the new listings, but we
Mm-hmm.
still saw that the months of inventory went up slightly, 3% on this number's not that much.
Yep.
And we've seen the days on market go up as well, to be expected during the summer months. But
Yeah.
yeah, I think Newmarket's held up pretty well. And
Yeah.
I remember back in 2017, after the market kind of peaked out, Newmarket got really hit hard, and
Mm-hmm.
it's held up a lot better this time than it did last time we went through this type of a market. So good to see Newmarket holding true, holding strong. I think a lot of people want to be in this area as well.
And you know what I think that has to do with? I think COVID had the biggest impact on that because home prices in general sprawl down everywhere. Like if you go well past Newmarket, up to the Simcoe region and Barrie in particular, how expensive housing got there through COVID, and of course it's retracted as well. But now I think our general core there of Richmond Hill, Aurora, Newmarket, even up to Bradford and Holland Landing, that core is maintained much better because there's been so much additional sprawl in terms of average price increasing.
Yeah.
And you're right, it's holding up a lot better than what we saw after 2017. And looking into the different price brackets, again, looking pretty tight in our million to 125, same up to the 1.5 mark, and even an increase in sales volume from 125 to 1.5. So that's kind of interesting to see because the price bracket above them did maintain the same in a year over year manner. So yeah, Newmarket just kind of holding its own, it seems, in that regard. Obviously, the 2 million plus price point taking a big hit. They have 16 listings available, only one sold compared to 5 from last year. So I think that luxury side of things or the higher end stuff in new markets where we're really seeing the impact.
Yeah, I think some of those buyers probably trickled down to Aurora because Aurora was a little bit cheaper as well. So probably that's
Mm,
why they went. But
mm.
to see 1.5 to 2 million hold up with the same amount of sales last year is a great sign. And then, we're basically below three months of inventory for everything else in Newmarket. And that's pretty strong for what we're seeing in a lot of other areas.
Yeah, absolutely. I couldn't agree more. And now Georgina, so what have we seen? We've seen Aurora with like a 5% decline in median price. Newmarket, I think there was, what was it, 3? And Georgina hovering right around that same 4. It's looking pretty similar across the board there. But this part's interesting. An increase in sold listings month over month, which is great to see for Georgina. We're still seeing obviously days on market is much more drastically increasing here because we have those sold listings and our new listings were down by 11%. So we're not seeing a bunch of 0 and 1 day and 3 day on the markets coming to help pull this average down. In fact, we've cleaned out some inventory and it's the other stuff that's still sitting, which is why we're seeing that higher days on market for Georgina.
Yeah, I think at the end of the day, the affordability in Georgina, like, you know, the housing market from Toronto out is a ripple effect, and when it comes back, it starts on the outer regions like Simcoe, like Georgina, and
Mm-hmm.
those prices pull back first. And I think we're starting to see some people saying, "Hey, you know what? It's really cheap." Like we're talking the median sold price is 790,000, where everywhere else is kind of 1.2,
Yep.
1.3. So you're starting to see some people go out that way. But having said that, the price is still down 4%. They've still got a lot of active listings on the market there. One agent tried to tell me that the market's bottomed out there and that they're on the uppity up. But, yeah, there's some more activity out there. And I think it's just because of the affordability. But we're not seeing prices moving to the upside either.
Yeah. And it's funny that, you got to be sharp because those listing agents will do whatever they can to try to get their home sold and get the most amount of money they can for their sellers. But when you're protecting your buyers, you got to make sure you're on the ball and watching this stuff to be able to counteract that. Because I had an agent in Central Newmarket just last night say the same things. Like he's bringing up a comp from March and saying that the market was softer back in the springtime than it is now. And I'm like, I don't know what market you're looking at because average price since then has come down about 80,000 in the detached market for Newmarket. So, nobody's falling for what you're selling right now. And sure enough, they're still on the market after an offer night that did not go through. So again,
Yeah.
you gotta pay attention to that stuff. And I love what you brought up about obviously when the market does retract, how it does happen in those outer areas first. So I think what we've seen is Georgina's had more time to kind of level out in this area. And the other great thing for them they've got going is their median sale price is so much more affordable than what we're seeing in the other markets. So it's a great place to be buying. And sure enough, we've got an increase there in sold listings. Coming into our price brackets, so where are we seeing this uptick in sales? I mean, no surprise, 0 to 750,000. We've seen that increase from 15 to 24 units compared to last year, and then a few more here in the 750 to the million mark. But all the way up to 125, we're still seeing that little bit of growth, and then maintaining really in the higher price points as well. But tons of choice here in the 750 to a million mark. We're looking at 106 different freehold options. Not huge months on inventory because we're seeing good amount of sales, but in obviously that 125 to 15 mark, 12 months of worth of inventory, maybe not the best place right now to have a listing at that price point. And know that you've got to do your best to make sure that you're marketing it and that you're getting all eyes on it because you got to stand out at that price bracket right now.
Yeah, anything over $1 million. I mean, even over $750,000, we're seeing 4.4 months of inventory. Yeah, we've seen an uptick in sales, but there's still a lot of competition on the market. And if you don't have this turnkey home in the best neighborhood, you might be sitting on the market for a little bit longer. And that bodes for anything over 750,000 in Georgina. But having said that, at the end of the day too, for buyers, this is a fantastic place to go looking because there's a lot of people that are sitting on the market and they might need to either adjust their price or just accept a much lower price at some point.
Yeah, I think what was clear to see here, because we still do have high months of inventory and lots of inventory out there, what we've seen is buyers are finding value in it, though. That's why we're seeing that sales increase across really a lot of those price brackets for them, is buyers are finding value in Georgina right now, and they're taking advantage of it.
Yeah.
Now, when we come back down to Richmond Hill, sharper decline in median price. This is our highest one that we've looked at today with an 8% drop just month over month and a slight decline there in our sold listings. Again, we're comparing now month over month. So this is July from June. Totally makes sense that these are the numbers that we're seeing. But I would say luckily for those people that are on the market currently, we did see a 10% drop in new listings coming onto the market in Richmond Hill, which is great news for those other sellers that are out there currently, because we are seeing that uptick in days on market as our sold listings drop a little bit, right?
Yeah, the one thing that really stands out to me on the Richmond Hill is the 28 days average on market. And what we're seeing with a lot of other popular cities like Newmarket, Aurora, even Markham and some other places is they're more in the 22 to 23 days. Mm-hmm. So there's this big jump up in days on market in Richmond Hill. And, and even the sale price, down 8% month over month, that's a huge drop there. So more detached, clearly probably sitting on the market and not moving, and maybe just more townhomes and condos being moved.
Yeah. Yeah, and we're gonna break that down here, right, in terms of our price brackets, because you can see This is totally reflective of the change in terms of price year over year, but seeing 38 more transactions in the 125 to 15 mark. It's kind of funny. These have maintained as well, but we've seen the drop over here, which I think is what's filtered down when we look at Richmond Hill's price brackets. Because that first little bit's not bad in terms of maintaining compared to last year, because we know that overall we've been down in a lot of categories for transactions. So it's nice to see that they're still maintaining there, but the months of inventories are stacking up a little bit, but not too bad. Looking at our 1.5 to 1.75 even, that's pretty reasonable compared to some of the other stuff we've seen, which is interesting.
Yeah, that 3 million plus. So that's a problem.
Mm-hmm.
102 properties with only 7 buyers currently on the market, 14.6 months. They're going to need a big turnaround to see
Mm-hmm.
any real activity up in that price bracket, and definitely anything over $2 million. They're struggling a bit in Richmond Hill to move those products.
Yeah, no doubt, no doubt. And again, we're talking about high volume here. There's some categories that we've looked at previously where we're seeing, obviously a lot of inventory stack, and maybe we are around 8, 9, even 10 months worth of inventory, but we're selling a decent amount of homes in those other brackets, right? And
Yeah.
and to only sell 7 when we've got 102 active, it's going to take more to get this churning around to see that change. And it'll be interesting to see if in the coming months, if some of this does decline, but it declines because it's filtering down into lower price brackets through price adjustments.
The thing I love about these charts, Dylan, is I can clearly see that if I've got a client that wants to purchase 1.75 million and above,
Mm-hmm.
I can clearly show the client, listen, there's patience, negotiation,
Mm-hmm.
there's great deals to be found in these areas, and
Mm-hmm.
no better way to look at a chart like this and show your client and say, listen, look what we got here. It's
Yeah.
some fantastic deals, clearly.
Totally. And what a great way to show your worth for your client, to show that you're watching out for them and saying, like, look, I know you might like this one, but in this market, if you go for it at the price that the seller's asking, you really are overpaying when you have a huge opportunity to make your money going in on one of these purchases with all of this other choice that we have here. So it's just a great way to keep being a consultant versus a salesperson when you're trying to help your clients.
Absolutely.
Okay, this is kind of been the backstory across everything that we've been talking about today. So Wawa did a report. They looked back at any time where we've been having these high interest rates and then the rate cuts start to happen. This graph is specifically showing affordability and percentage of income that people have to pay in terms of the averages for the housing. And at this stage, it's the most unaffordable has been since 1991. If you come right across our chart, all the way back to 1991 is where we are. And the important thing that I think that agents need to know about and people need to be mindful of, because we've all been waiting for these rate cuts to happen, but things don't turn around overnight. And traditionally, what they found is home prices actually continue to fall during the Bank of Canada rate cuts after the peaks. So we've got some more cuts coming ahead, which is great news. It is going to help with our affordability. It's going to help people on the refinance side. It's a good renewal side. It's a good thing nonetheless. But what does that mean in terms of our average pricing? And you've seen the charts at the beginning of this where we saw those average prices continuing to fall right now, and it's holding very true to what Wawa came out and was saying last week. Um, I mean, are you seeing the same thing, Matt? Obviously, in terms of all the data that we looked at today, I think it's showing the same thing. And what do you got to add there in terms of, I think, what we can still expect, and especially with outside factors, economic factors that are beyond just the supply and demand of the GTA housing market.
Yeah, so there's typically a lag effect when central banks move interest rates, and we kind of saw it. They slashed rates in 2020 like aggressively. They were
Mm-hmm.
bringing that thing down very, very quickly. Um, but prices they didn't just go right up instantly. It took time for prices to finally peak out when they did.
Mm-hmm.
And now we're seeing the same lag effect with
On the
with
other side.
how high rates went. and they aggressively raised rates like we've almost never seen before in the modern, maybe in the last 40, 50 years. We've never seen anything like that. And now we're starting to feel that go through the system to a degree, and it's only going to keep accelerating. But I think what this chart really shows is there's a lag effect, and people have had, all cost of living across the board really restrict what they're being able to spend in the economy. And that's, I think, the next leg that's going to drop is like, yeah, they're dropping rates, but there's a lag effect, and it could take a year, it could take 2 years to start to see the economy start to move in the right direction again.
Yeah, and I think there's more changes still to come within the economy from where we were looking at, and this is one of them. Looking at unemployment, right, and we're seeing it kind of creep back up here from our 2021 low, and yeah, talk to me about unemployment and what you're seeing and reading right now, Matt.
Yeah, so I kind of just added the from the last chart where
Yeah.
there was recessions, and we can see that when the job market starts to turn and we start to get a higher unemployment rate, we start to get recessions. And what we're seeing now is we're seeing unemployment starting to rise. Will it start to accelerate because companies aren't hiring as much because they're starting to have to refinance their debts now at much
Mm-hmm.
higher rates? And we're going to show in the next two charts just how much higher rates still are. I think people don't might not realize that rates are still as high as they've been since 2009 and 2010 still. So we can see that we're in a spot where typically recessions do happen,
Mm-hmm.
and it's just because of the rate cycle.
I love that you added those recession markers in onto this chart so that we could see how that carries over. And then, of course, coming into the next one, looking at the Bank of Canada, like what are we talking about here? This the prime rate or
The
the
variable,
overnight rate
yeah, the
and
overnight rate.
the overnight rate. And so we can see those two cuts there, bringing us down our 50 basis points and tracking back to when we were that high again. Was this like 07, 08, kind of around here?
Yeah, oh 07, oh 08, oh 09, somewhere. It's hard to see. I think it's oh 08 in
Yep.
2008. So we can see that since 2008, like look how low the mortgage payments or the overnight rate was for lending.
Mm-hmm.
And we're still so high here, and there's still so much to go for it to potentially get back. And I don't think they're going to go as low as we were before, but maybe somewhere in the middle there is where we're ultimately going to end up.
Yeah.
So we still have such a ways to go before I think there's any real relief that we're going to see in the market on the variable side. I know what people are going to say. They're going to say, well, Matt, that's variable. People are locking in at fixed right now. But if you go to the next chart, yes, fixed rates have finally, if you followed us, broken the uptrend that we've
Yep.
seen since 2022. But if you go back to where we are now, it's 2010 that fixed rates or the 5-year bond yield are still that high, right? So
Yep.
we've got a little ways to go. And look at 2018 when the 2017 market rolled over.
Yep.
We're still higher than that as well. So there's still a lot more downside to interest rates that need to happen for us to see a change in the market, and this is what's ultimately having an effect on the unemployment rate as well.
Yeah, great. Well said. And I think the last thing that I would just point out, as you were mentioning, look at how quickly those increases happened in such a
Yeah,
short space of time. Like when we look back here, we've got gradual increases. I mean, a little bit different there, in after July 98, but it a little bit more gradual in terms of this straight shot up from what we had after 2020. And I think the other thing that you'll see is that the declines can come reasonably fast. We're looking at, our earlier markets. And I think that hopefully we'll see a similar trend here, that we'll see reasonable paced cuts coming down. I mean, yet to be seen. But it is important to note that, yes, we have finally broken through on the fixed rate side or our bond yield side on what that might look like. So we've got a new low compared to where we were before, bouncing off this line. But like you said, we're still high. We're still as high as we were after the financial crisis around 08, 09 there. And then we are higher than what we saw after the 2017 market correction. We're trying to get buyers back in. And sure enough, 2018 was a really slow year. It was slower than 2017 when the corrections first started to happen. So I think that, yeah, we're still not out of this yet. And it'll be something that we just have to watch for. So
Absolutely.
I want to thank you guys for joining us today. This is something that Matt and I do on a regular basis. We do it to make sure that we're serving our clients at the highest level, that we're using it to point out opportunity to them in this market. We're using it to educate them about how to sell their home for the most amount of money in today's market. And we do that by making sure that we know what's going on in the market and we're coming in as close to value as we can, because those homes that are overpriced tend to sit, become stale, and buyers beat them up when it comes down to the negotiation time. So we encourage you to make sure that you're watching this for yourself, or that you're taking part in watching us, because this is the best way to make sure that we are taking care of our clients who put their absolute trust in us. So we look forward to seeing you again next time. I'm Dylan. That's Matt. You can find us on social media. It's Matthew Gizzie. I forget your handle. If you want to share that right now, please go ahead.
Yeah, it's at Matthew Gizzie.
Perfect. Nice and simple. I'm at Dylan.Silbernagel. You can always reach out to us. We hope you enjoyed this. Take care and bye for now.